Whether you're buying or selling or just trying to figure out what's your home worth in the greater Prescott Valley, Chino Valley, or Dewey markets, you've come to the right place here with Peter Fife on Prescott, Arizona Real Estate. Join me now to find out what's happening in July of 2026 for market reports. So let me tell you what's going on and some of my feelings about where things are going. Because I can tell you the past, but I'm also going to tell you what's going on currently because I'm really kind of keyed into the market. Okay, here we go. So active inventory in July of 2026. We are at 1629 active listings on the market versus 1801 last year. That's down 9.6% compared to last year. Now that's good because last year was too hot. We're at 1629. That has been creeping up, which I don't like in the last 3 or 4 weeks. We were running around 1560, 1570. We creeped up to 1629. Things have been a little slow the last 3 weeks. If that continues, we're going to see it hit the market trends in August. When we hit that sometime in September, we'll see what happens. But as of right now, it's been a little bit slow for the last 2-3 weeks. I'll worry about it if it's slow for 2 more weeks. But that's where we're at right now. New listings. So new listings in July of 2026 were at 505, down from 535 last year. So that's good. Less listings is good for price, to keep our prices okay. The market is right now a little bit of buyer's market is what I'm seeing out there right now. However, if you price a house right, it will move quickly and you might see multiple offers. So that's what I'm seeing. They'll either sell right away in the first 2 weeks or they'll sit for 60 days. That's what I'm seeing. Showings per listing. Showings per listing is 3.1, the same as last year. That's not fabulous because last year was slow. So we want to see a little bit more showings per listing, 3.1. I'm averaging 8 to 10 a month per listing just because of my marketing. My marketing gets to about 300% more buyers than the average realtor because I do so much marketing. Pending home sales. Pending home sales is 379 versus 374 from last year. About flat. That's okay. That's healthy. We run in that 350 to 400 range. That's a healthy range. Right now, month supply of inventory is 4.9%. That's a decrease from 6 months, which was last year. Remember, last year, month supply inventory was high because our inventory was high. Days on the market. Days on the market decreased by 11% to 39 days. Remember, when we start seeing that decrease in days on the market, it's not necessarily a good thing. That means a lot more new listings hit the market. So it's showing a lower days per market. So if you have a whole bunch of new listings, and you have some stagnant ones, it's going to lower that days on the market. Okay? Next, price per square foot. Same, $288. What am I telling you? It's flat. Okay? We're looking a little flat there. Closed sales, we were 371 this year versus 367 last year, up by 1.1%. If you look at that graph, you can see that we're kind of flatlining on our sales, and last year was kind of going up. So we'll see what happens. Median home sales price, about the same as last year, $479 a year ago, $482 this year. Here is what I am seeing and what I'm predicting. Right now, from looking at a lot of the national averages and other stuff, they're predicting that it's going to be flat for the next couple of years probably. Interest rates have climbed to about 6.75 to 6.85 just recently. As long as the interest rates stay a little high, our buying power is decreased. Now, half of our homes, 40%, are cash, but they're getting their cash from somebody buying their home in another state that needs a loan usually. That small fish matters a lot. If the affordability is down, which it is, the ability for those buyers to buy houses is not good. The good news is real estate prices nationally have stayed about flat. They were up 0.9% in the last year, whereas wages were up 3.5%. That's why they're predicting a 3 to 4 year stagnation. They're going to see prices stay flat for the next 3 to 4 years. Wages go up 10 to 15%, then the affordability will kick in. Now, if you see interest rates go way down, which is unlikely, then you'll see the market kick in again. If you see the stock market tank or mushroom clouds happening, watch out. That's all I can say. Thanks for watching. I'm glad to give you good information so you can make good decisions when it comes to buying or selling your house in Prescott Valley, Chino Valley, Dewey Humboldt, or Paulden. So call me anytime. And if you have any more questions, I'd love to talk to you. That's my favorite thing to do. Thanks for joining me. Until next time, be blessed.